Recording. And I'm going to share my screen here. And hopefully you still see, does everyone see the mastering assumable loan still?
Yes.
All right, great. All right. So as I was saying, again, I've done 4 of these transactions this past year. Rick DeMario, who's going to be on with us as well, is a lender that I've worked with for quite a few years. He actually is our personal lender for our home here in Denver, and we started talking when the writing was on the wall last summer, summer of 22, when the interest rates started going up. And I started thinking to myself, well, man, there's going to be some great opportunities if we start moving into the sixes and sevens. Well, we did. And so we were kind of preparing for it summer of 22. And like I said, I really started hitting them at the first part of this year. And again, it won me some of the some of the listing appointments that I went on because I proposed something that no one else was really talking about. And in also in regards to that, even right now, there's not a whole lot of agents, real estate agents, that are really working in this assumable space right now. And that's one of the reasons why myself, Rick, Lee May, who you're going to hear from, we decided to put these on because what I realize is the more educated realtors we have out there, the more they can share it with sellers, and the more we put people at ease. Because what I've found is a lot of times we're often afraid of the things that we don't understand. And this is something to really not be afraid of. There's really not necessarily a downside to it. I'd say that the only downside that I've come across is the time frame that it takes. But like I said, once we get to the closing table, everybody's kind of winning on this, and I'll share more what I mean by that. But let's just get kind of right into the assumable aspect of things. Just for those of you that don't know me, again, my name is Barry Overton. My background, I spent 26 years in law enforcement, 22 years currently in real estate. I've been a business owner since 97, 3-time best-selling author, big on coaching on mindset and brand awareness, and one of the founders of the Super Agents Collaborative, which is the organization within EXP that we have. Let's just jump right into the assumables. Assumables. This is going to be really just a guide for understanding how to go about number one, identifying assumable properties as well as marketing, doing marketing around assumables that will help you to generate more business for yourself. So what is an assumable loan? For those of you that don't know, it's really the ability to be able to go in to a transaction and assume the current terms that a seller has on their property. And that means the number of years that they have left to pay on it, the interest rate, the mortgage payment. You're taking those over, you're assuming those. And ideally, if you're getting into one, say 28, 27 years in, where they only got 2 to 3 years in, chances are you may be able to get in at a pretty good price. And we're going to talk about making up the difference between the assumable amount and the new purchase price. But a lot of times it puts you in a better position to be able to do that in those situations. And so what types of loans can be assumed is always a big question. So conventional loans cannot be assumed. So it's one of the first questions when I go on a listing appointment and we're thinking about the assumption route. I'm finding out, do you have a conventional or do you have a FHA, USDA, or VA loan? The conventional is the only one that cannot be assumed. The other 3 can be. Now, one of the things that you do have to take into account is every lender is different in regards to how they approach assumables. So even if it is a FHA or a VA loan, the first step that I usually have a seller do is call their lender, find out if their particular loan can be assumed by a buyer. And once they do that, typically the lender will send out an assumption packet to the seller. The seller is going to have some documentation that they need to complete in there, and it's usually good to get that ball rolling before we even hit the market if possible, but definitely before we go into contract, because it's just one of those things that we can have completed and out of the way and try to speed up that process of the time frame. And I'll share what that time frame is here in just a moment. Let's talk about VA assumables, though. We know that with VA loans, not everyone is a veteran, not everyone has VA benefits. So in those cases, in many cases, what I found on VA assumables, the seller has the decision making on this of if they want to allow a non-veteran that does not have VA benefits to assume their loan. I can tell you, being a veteran, one of the things I always say is the two things that I left the military with is some PTSD and VA benefits. And while I would give up one, I don't necessarily want to give up my VA benefits. So um, most veterans will not necessarily want to give up their VA benefits. I did have one this year because it was kind of a dire situation and they needed to get out of the house. And we kind of talked through how, he wasn't buying right away and he's not going to buy for a couple of years. So we were to talk through how he'll be eligible for first time home buyer benefits within 3 years of selling or after 3 years of being a non-homeowner. So he was more open to giving up those benefits. But in most cases, a veteran is going to want another veteran to assume so that they can keep their benefits and use them, at their next destination of where they plan to go. So let's talk about making up the difference. I talked about this a little bit. That again, the one thing that's important, and this is probably not for the first time home buyer unless they happen to have a lot of money to put down, but the one thing that's always important, especially when you're marketing this, because I can tell you when I market, assume a 3.25% or a 2.75% interest rate, the message that I get back is, they're excited about it, but they got $10,000, for down payment. It's like, yeah, that's probably not going to work because we got 100,000 that needs to be handled in some form or fashion. So your buyer is going to have to come up with that difference. So we give an example here of a property that's being sold at 500,000. The assumable loan is at 400,000. So we got 100,000 that needs to be either brought to the closing table or the buyer may need to look at doing a second mortgage on an assumable. And that's why we have Rick, who's going to share the product that they offer in regards to that. So again, if they don't have the cash to be able to bring, then they're going to be in a situation where we need to look at possibly doing a second mortgage. And Rick will, like I said, he'll shed more light on this, but there is an amount that has to be put down with that, and it's usually 10% of the purchase price. So it's still going to be a pretty significant amount. And like I said, with most first-time home buyers, unless they're in a position where they can put 10% down, the assumable is probably not going to be the best route. I can tell you the 4 deals that I did this year, all of them were somewhere between 100 to 150,000 of equity that had to be brought to closing by the buyer. And in all those situations, they were selling another property and they had those funds to be able to pay it. So none of them had to do a second mortgage, and they all had, the cash to be able to cover that. So
Great quick clarification on this in the example, right? So the assumable loan is 400K and it's being sold at 500K. So is that 400K? Is that what they currently owe on the loan, or is that like the total? Do you know what I'm saying? Like,
Yeah, no, that's the current amount that they owe and what the
oh,
buyer will be assuming.
I see. Yeah. So there's no way to like, yeah, walk into equity, which you could potentially, I guess, find in a different scenario, right? Like if maybe you get a appraisal lower than, or like a purchase price lower than this appraisal, right? That wouldn't necessarily.
Yeah, and that's the other thing. You bring up a good point. If you're bringing the cash difference, the company, the mortgage company that has the current loan, they are only worried about the assumption part. So they don't care about the cash difference. So they don't do an appraisal. So that's one benefit, that you don't have to go through an appraisal as long as you're bringing the cash difference. But yeah, in most cases, you're probably not going to walk into equity, and I'll kind of share with you why that is here in a minute, because it's kind of a give and take. I mean, you could either go out in the market right now and probably walk into some equity because people, well, right now we're at like 6.25, I think, or 6.5, but you're paying a higher interest rate. So we've seen prices go down, and I've had prices that have gone down below the appraised value on properties. So yeah, you can walk into equity, but you have the higher interest rate. But
Right.
in this situation, you're going in at, say, a 2.75 or a 3% interest rate. You're probably going to be saving 1,000 plus per month on your mortgage payment. But that seller is basically going to want top dollar for their property, because they're giving up that interest rate. And so it's kind of a give and take. So I always say it's like a time machine, this assumable piece, and I'm allowing people to go back to 2020, 2021 with the interest rates that we had back then. But you also remember what we had in 2020 and 2021 are the bidding wars and appraisal gaps and all the things. So the win for the seller is usually they're getting a higher price for their house. Every one of them that I've done this year, it's been the highest sold in the neighborhood because of the assumption, because now the buyer is not concerned about how much they're paying for it because they're getting this amazing interest rate. So yeah, you won't really see the equity piece with it.
Thank you.
All right. So again, like I said, and this is where Rick is going to come in on the second mortgages. Rick was the only company for a very long time that I had come across. I just recently talked to another lender. I don't even know what her company is. She was talking to me on behalf of another buyer that was looking to purchase one of my current assumable loan properties. But very few companies out there, mortgage companies, that can do a second mortgage on an assumable guaranteed rate mortgage, who Rick is with, can actually do them. So I would definitely, he'll put his information in here, in the chat. I would definitely, connect with him. Like I said, we've worked together for many years, and just great guy, great lender, and very creative. And he's going to be sharing here in just a minute, what it looks like on the second mortgage side. Um, okay, so getting the assumption started, as I was kind of mentioning, the first step is having the seller talk to their bank, getting that assumable or assumption packet. So it kind of spells out what all the steps are, for the seller, and preparing to have it ready to go once we get an offer. The buyer's role, the buyer still writes a contract, and they're going to have to complete. They're going to have the seller has a portion of that assumption packet, and the buyer has a portion of that assumption packet. And one of the things I think that is the most important, especially when you're working with an agent that is kind of new to the assumption process, is they have to stay on top of their client, of making sure that that documentation is turned in as quick as possible. Like I said, it's kind of a hurry up and wait process. So we want to be, on the sell and the purchase side, we want to make sure if we're given a task, we do it immediately, get it done, and the ball's in the lender's court at that point. And because we already know that we're going to be waiting, because it has to go through, a small department, because mortgage companies do not have a lot of people working in their assumption department. So we want to make sure that we put it back in their court and they can do their thing as quickly as possible. And I've talked about kind of the timeline in regards to that. I'm seeing anywhere from 60 to 120 days is kind of the standard. I have closed some that were less than 60 days. We were probably 55 or so. I've closed some that were 150 days. The one that was 150, honestly, we probably could have met 120, but we ran into a snag with solar panels that were on a lien on the property and it had to be handled. So now I can tell you with Chaffa, I have one right now where Chaffa has said, nope, we're 120 to 180 days. And I think it's important as the listing agent to always know that, because you want to kind of set the expectations for the buyer of knowing how long this process is going to be. And while I'm talking about buyers, another thing that I think is very important, when you start advertising the assumption piece, you're going to get people that have not even talked to a lender yet, that they're thinking to themselves, well, wait a minute, I know I can't get this house at 6.5%, but man, I think I can get it at 3.25. And now all of a sudden they're rejuvenated and they want to get back into the market, but they haven't talked to a lender yet. So the first thing it's the same way as if we were taking a contract on just a traditional loan. You got to have pre-qualification. You got to have that letter, because I'm not going to go off the market, accept your contract, and have to wait 60 to 120 days to find out that you wouldn't have qualified because of a credit or DTI or something along those lines. So you want to make sure that when they come to the table and they do a contract, you're not going off of them getting the loan assumption approval first. You're first making sure that they're already pre-qualified. And in most cases, I would prefer that they're pre-qualified at the 6.5%. All of the deals that I've taken, they were already pre-qualified at the higher interest rate that we're currently at, because I know if they qualify there, they're definitely going to qualify at the lower interest rate that they're assuming. So that's what I wanted to cover for you there. This is just my QR code and contact information there. I want to bring on, I have two people on here that, again, we formed a partnership in regards to this whole assumable aspect. And I definitely want you to be able to do the same thing. That's why I wanted to bring you guys here. And you'll see how valuable they are to this whole process and making this work. So first and foremost, let's bring Rick DeMario on. Again, he's the lender with Guaranteed Rate Mortgage. We've been doing, like I said, business together for quite a while. And we are really just on a mission right now to get as many agents equipped to handle the assumables as possible. Like I said, it's great to see that the interest rates are going down right now, and we're, I think that's going to be beneficial to the market. But they're still, even if they're at 5.5%, what if you can assume someone's 2.75? Which one would you take? So I think assumables are still going to be around for a while, because I just don't see us getting. I don't see us getting under 4 for quite a while. But without that, or without any further ado, I'm going to bring on Rick DeMario. Take it over, sir.
Hey, thanks, Barry. Appreciate it. And welcome to everybody here. And hopefully I just had sent in through the chat, my contact information. So if anyone does have questions or thoughts about the assumables piece when it comes to dealing with the servicing but actually the second mortgage side of it, just let me know. I do want to just clarify a couple of things, is that I am going to be helping any buyer that needs to bridge that gap. So as Barry is talking about the servicer, I'm not the person to talk to in regards to, how it works and everything, because each individual lender is going to have their borrower and it's going to be specific to that person. But that being said, I do have 20 years in the business. So rest assured is that a lot of questions that do come up, I'm able to answer really much, on point. But if I do need to research something, I'll get back to you as well too. So with that, I do want to share is that with guaranteed rate, we do have a special investor that I've been able to kind of work with now in the past, how many months so, that has developed a second mortgage product that can help bridge that gap. Like Barry had mentioned in that first example. I do want to share that person, my contact, was on our last call. He was not able to make this call, so I'm going to be just speaking on behalf of him. So I can't really kind of do from a slide perspective, so I do apologize. But again, if there are any questions, please put them in the chat, and we can get to them either now, Barry, or at the end as well too. But that being said, it's pretty straightforward here, folks. Is that example is perfect that Barry illustrated. Is that when there's a difference from it, is that we can come in, myself can come in to help a buyer to maybe bridge that gap. Again, as Barry mentioned, is that we need to be at 10% down of all the full transactions. So that example of 500,000, the gap was $100,000. Is that we could take 10% of that $500,000 price and provide a second mortgage. It's a line of credit of $50,000. So that's a significant, less than, now they have half of it's been covered. And I do want to share that the specifics of it, again, we can get more detail out to you in regards to once I get in touch with the investor, but the qualification standards are conventional. So we're not going to get any creative financing. We're not going to get anything bank statements. So it's going to be typically your straight Fannie Mae guidelines, let's say maybe 43-45% debt ratio, W-2 income, et cetera. Credit scores going to have to be meet their 680 score, right around there. Usually you're going to get better abilities to qualify if you're over 700. But I do want to share the cost is probably going to run anywhere between 1 to 3%, of the loan amount. So again, not the purchase price. I'm talking loan amount. So again, it's not going to be a huge number. And usually the interest rate is going to be like a prime, plus 1.5, maybe prime plus 2, et cetera. So the terms are actually very, very good. And if you look at the whole scheme of it, if you can get a rate of 3% for 400,000 of it, and then you have, let's say, a rate of, let's say I'm using 9.5% on 50,000, that's a pretty good deal. And that buyer now has the whatever difference they can kind of keep for any renovations, et cetera, as well for it. Another thing to kind of keep note of this is that assumable part is that they go straight to the servicer. They don't need a second mortgage. They're not going to need an appraisal, like Barry had mentioned. But knowing if they need additional assistance, that said, being a second mortgage, they are going to be requiring an appraisal on that property. And most often than not, from a buyer seller perspective, is that you guys are going to already do kind of your market research. You're going to kind of have a good feeling that it's going to, value out as well too. So, but again, if it doesn't, there might just be a little bit more that the buyer has to come in to the table, but they still might qualify for that second mortgage difference as well too. And finally, what I want to mention as well too, is Barry made a good point, is that anytime someone's going to go see a house or they're kind of get invigorated about buying again, they want to be pre-qualified. I do highly recommend is that you give me the option to either be the first, introduction to them, or at least do a second opinion, that if I can get an understanding where their finances are, I can almost verbally kind of tell you that things look good. But we also can do a pre-approval right through my system, and it does not impact their credit score. But it's fully run, fully automated underwriting. And then I check with the investor about their program. So we can be pretty much confident that they would qualify for that second mortgage as well too. And then finally from that, if I can do the second mortgage for that, or just offer assistance on either, let's just say the seller standpoint, if they are looking to sell, we might want to get myself introduced to the seller to help them understand, the whole concept, and that they get them pre-approved here. So just a little kind of a sequence of maybe strategies, how to work this out. But if there's any questions, or Barry, if I missed anything from our calls from prior one, just let me know. Or if anybody has any questions, I'd be happy to answer right now.
I think we do have a couple of questions in the chat. Let's see. Rachel had.
Oh, there's one. I see one from Monica.
Okay, yeah.
Yeah, if buyer,
Go ahead.
I can read. If buyer gets tired of waiting and qualifies for a non-assumable loan, can they still close and shut down the assumable process without losing the home? I mean, I guess that's from the listing agent's perspective. They're willing to kind of switch gears. But from my perspective, if I already have them pre-approved as well too, I can move very fast. So if I already know they're good and they qualify for a conventional VA, FHA, or whatever loan, I mean, I can close things really much. If they wanted to stop that process and close in 2 weeks, I can do it. So again, that's the importance of having me do the qualification for that buyer.
Yeah, and Monica, from my experience with it, I haven't gone through fully with someone taking the pivot and saying, "Hey, we're just going to go traditional." But we had some conversation around that, and it was one of the buyers on one of my listings was going to do that, and I don't see that there would be a problem at all. It just kind of shuts down the whole. It's almost like if you look at it from a short sale perspective, if you're going through the short sale process and then something happens where it's like, okay, we now don't have to sell this property as a short sale. We can just sell it the normal way. You could shut down the short sale process. So it's kind of the same way here. And so I wouldn't think that there would be any issues or concerns there. But the one thing, like I said, the one that we had that was 150 days, that's the one where they were considering it, but they saved $1,400 a month. That was the only thing that kind of kept them in the game. Is they said, you know what, because they had stuff in storage, they're staying in a hotel because they were supposed to be in, a month earlier. But they said, you know what, it's going to be worth it in the end. So yeah, and then Rachel had a question. Do you know about assumable loan exceptions under F&F? Is that Fannie and Freddie?
I'm assuming that is.
Yeah.
I didn't dive into that yet.
Okay. One thing that I can tell you, what the easiest way for me to find out if this particular property can be assumed has been first finding out if it is FHA or VA or USDA, and then having the seller make that call. Because if there are some guidelines within Fannie and Freddie, that's where we're going to be able to find it out on that individual property. So that's because I actually had a
Freddie, I'm sorry to interrupt, but on Fannie and Freddie, if you call the service guidelines, like for that one right there, they interpret them to you. They only interpret them to lenders, and you can't be a mortgage broker. You have to be actually tied to a bank. So it's a little confusing, but I think when you look under these exceptions and like family members and things like that, and other ways that it can be allowable transfers, there seems to be quite a few. And I had a lender call because it was two people that were unrelated borrowers, and one wanted to assume, and the other one gave permission. And he was like, yeah, these are going to get really popular. But then when they went to the bank said no. Even though, and then so the client called Fannie and Freddie, and they were like, well, hey, my lender said this, and they're like, we're not allowed to interpret the guidelines. Only banks can, and we're saying no. So I find that to be just a issue, and I'm not sure, like from your perspective, Barry or Rick, how we more transparency in the government when it comes to these exceptions, and it, just because the bank obviously didn't want to give up give the low interest rate. That was it. But the guy was like, oh, are you talking about B dot dash dash? It was exact one, this, it was he's like, I just gave a presentation. He's like, because this was last summer, like we said, writings on the wall. He's like, now that we're or it was kind of later in the year, and he was like, now that these interest rates are going up, he was like, this is going to become more and more popular, but banks are allowed to interpret the guidelines the way they want to, versus like what this guy said, and a consumer can't get these interpreted. Isn't that crazy?
Yeah.
That is. I'm going to do some research on it, Barry and Rachel and the group here. So whatever I find out, Barry, I can send out to you, because I'm sure you'll have the list of the registers here, so I can do that.
Okay, and then Lee May, who I'm going to bring on here in just a second, may have some
You might know,
additional information on that as well. But I can tell you, out of the ones that I've done, I've closed 4, currently have 2 on the market. So I've been doing them quite a bit, and I've only run into one situation on a VA loan where the lender would not do the assumable on it. So, but that's again, this is kind of the area where a company called Rome and the lady that you're about to hear from next, Lime Vera, where they come into play. So, and I'll come back to your question, Michelle, in regards to that 10% here shortly. But this is, if you guys were in the business during the short sale time, you know how tedious of a process that was. And I mean, man, there were just some days that, you're on the phone for hours with the bank trying to get answers. And so, lo and behold, someone got smart and said, hey, we're going to build a transaction coordination company for short sales. So we handle this. The agent doesn't have to handle it. The buyer and the seller don't have to handle it. We handle it. Well, that's what we now have with Assumables. And that's what Lee May and her company does. It's called Rome, ROAM. And they do some amazing stuff, but that's one integral part of it is keeping me off the phone for hours of dealing with the banks, as well as she'll be able to touch on. They have a referral program, which when she drops her information in the comments, I highly suggest that you get set up on that referral program. I got set up on it probably about a month ago, and I've got 4 referrals from them. 3 of them I am actively working. And I didn't say leads, I said referrals, because these are people that most of them are already pre-qualified, they're already in the process, and they are actively looking, and they like this idea of assumables. They want an assumable product. So it's been a great aspect of additional business. So she'll be able to share more with you on that. But again, like I said, when I met Claudia, who works with Lee May, I told them they were godsend, because at that time I was doing, a lot of that work on the listing side, and to know that there's a company that's out there that can take a lot of that burden off is just a huge relief. So without any further ado, I'm going to have Lee May come on and share what she does and what Rome is doing.
Hey guys, nice to meet everyone. Thank you so much, Barry. It's been so great working with Barry. Done such a great job with all of our clients, and definitely a preferred agent for us. So thank you. To answer, I think it was Rachel's question. Is that right? From before, that's actually part of our job, is to push these servicers when they sometimes give conflicting or confusing information. I think if a servicer is saying that they simply don't do a loan assumption, there are a couple possible things that are happening. One is sometimes the representative that you speak to at that servicer doesn't know. And so for a few different transactions, we've actually escalated it to someone who is higher up in the company, and we asked them, right?
I escalated it actually.
Oh, sorry.
Because it was actually a personal situation, and we're 2 unrelated borrowers. And it has in there, if you're unrelated borrowers and they've owned the property for 12, one can assume the liability, but the bank said no. And the odd thing was that it was it's a portfolio loan, but they sent the letter to Dora. They said, that they adhere to Fannie and Freddie guidelines, that they never make any decision. That no loan officer has decisions over any loan, even though it's a portfolio loan, where it's like, I'm sorry, that's the whole point of the bank. That's why I was able to close the HELOC in 3 days, because, lender's like, yeah, I'll just come to your house. I'm the one who drafts the papers. I'm the one that decides. You know what I mean? So, yeah, it was just really, and when I had my lender call in, he was like, it's a slam dunk, and he's using all these sports references like dudes love to do. But yeah, it was just really confusing. And I would call and they would say, well, you need to speak to your servicer. And so here I have a general counsel of a bank saying, no, this is how we interpret it. And that's how it's interpreted.
Right. Yeah. no, those conversations can be difficult. And I also always ask for everything in writing. So I think sometimes also like confusing information can be given almost intentionally, because like you correctly mentioned, they're incentivized not to let the assumption go through. So I always say, FHA loans are assumable based on HUD guidelines. That's very clearly stated. I can send the HUD guidelines over. That's helpful for people. But I always ask, if it's not assumable and you won't approve the assumption, please send over in writing the reasons why you won't approve it. And I also find that also helps get things moving. But yeah, they do ultimately have the discretion to approve or not approve the borrower, so they can block an assumption on that end. The reasons why I've seen borrowers get blocked is because like insufficient FICO score, debt to income, W-2s, or if the seller's in arrears, that can happen. But yeah.
Yeah, and the interesting thing is if you read these exceptions, because I think a lot of people do know that VA, first of all, I didn't know that they lost their rights, so I'm really glad that I was piece of information. I would have been sad if I would have had a client and they thought they could use their VA loan and we go to buy and but under those exceptions, it expands it a lot more. I mean, there's even LLCs, I think, and stuff, but the VA and FHA, but then there's these exceptions that they have to what it says without exception approved. So I just think the list could be a little bit longer. And I think, banks, and then what they ended up saying was we disclosed it in your loan packet, which was 131 pages.
God. Okay. Yep. No, that is very fair. That's very difficult for sure.
But I think empowering consumers and I think kind of pushing back on banks and saying that like, if Rick can call them and like my lender did and the guy who can actually dispense the information, why is there if even though it says that it's supposed to be done, a bank can still deny it, is that what you're saying? I mean, because it says very clearly in this thing that it's like without exception, the bank must approve the following allowable exceptions.
Yeah, I've never seen a direct like situation like that, but I'm sure it does happen. That's very tough. I'm sorry you had that experience.
Oh no, but there's a lot of other things that are
Yeah.
accepted. If you made into like a little brochure, it's like VA, FHA, and then allowable things because it's like family and things like that.
Yeah.
Like doing a family transaction.
Okay, that's a good segue. We can also talk about this more later, Rachel, if you'd like, but I do have a short little PowerPoint presentation. Let me see if I can share my screen. Are you guys able to see this? Cool, okay. So yeah, I don't know if I can make it full screen and still have that work. Let's try. Okay, yeah, now it says paused. So I'm just gonna go ahead and share it like this. Everyone can see this? Perfect, okay. So yeah, I work for Roam, ROAM. I will share our website later as well, but we were basically started earlier this year. Our founder, Ronick, started the company because he saw the interest rates were really skyrocketing and he saw that the assumable mortgage was a way for buyers to continue getting these rates as low as, say, 2.25% instead of originating a new loan at 8%. Barry has done a great job of describing the assumption, so I won't go too much into it, but we're basically the transaction coordinator for all assumptions, and agents can think of us kind of as a tool in your back pocket to help facilitate the entire assumption process from beginning to end. So one way to helpfully, I think, frame what we do is to ask, why aren't people doing assumptions right now? Like, what are the main reasons that that assumptions are not more accessible to people? So I think one aspect of it is the discovery aspect. It's difficult to have one central database to even find homes that are financed with FHA and VA loans. And then to have those conversations with the sellers to get them on board, to answer their questions about release of liability, about equity, and to basically get all parties on board. So we help with that discovery and connection aspect. And then, as Barry mentioned before, it's just a headache. And I think Barry had called us before like Advil for agents, which I think is a really apt description, because it's just going to be many calls with servicers. It's going to be sitting on hold for a couple hours with whatever servicer in order to ask for the assumptions package. It's going to be like providing extra documentation from the buyer to the servicer for the next few weeks. And we're going to be here to hold basically your hand through all of that and to work directly with the seller and the buyer through that as well. So you can think of us kind of as a platform or just a transaction coordinator for affordable home ownership. I believe that this QR code should lead to our map. So let me try that out. But essentially what we do is we have a map that allows buyers to very easily find homes that are financed with this assumable option. You guys can also use this, of course, as a tool. It's just withrome.com/maps. And maybe someone could pop that into the chat. I'll throw it in there later when I'm not screen sharing, but
Yeah, I'll get
the
it.
map is very perfect. Thank you, Barry. Very easy way to see assumable mortgages in your area. And then once a buyer is interested in a home, what are the specific steps to buying with Rome? So what exactly do they do next? So after they see homes that are financed with FHA and VA mortgages, they can essentially favorite these listings on our map, or you guys as buyer's agents can actually favorite these listings on their behalf and make an account on our, we actually recently launched a feature where you can make an account in order to save listings that you're favoriting for your buyers. And then we'll reach out to you and we'll reach out to the buyer. So after this, the immediate next step is to reach out to the seller and the listing agent to make sure that their questions are answered about the process and also to confirm the mortgage details. So the buyer will want to know, what exactly is the remaining mortgage balance? What is my down payment going to be? What is the monthly payment going to look like once I assume the seller's mortgage? So we'll also take charge of confirming all those details with the seller. Some sellers are more receptive to it than others, as you guys can imagine. Some sellers are immediately on board and some will have more questions like, will it still stay on my credit report? Which the answer is no. Will it, count towards my debt to income ratio? Will my name be associated with the mortgage in any way? How does title work? So we'll get all those questions answered for them before the buyer submits an offer. Then once the buyer is submitting an offer, we'll work with the buyer's agent to make sure that we include an assumption exhibit within the offer. This is usually a very general form that needs to just be checked off and filled out, but sometimes the buyer's agent will have questions about how to correctly fill it out, so we'll help with that process too. And then at that point, that's when our role as a transaction coordinator really kicks in. So we will file for third-party authorization. You guys might already do this as agents, but it lets us communicate directly with the servicer on the buyer and seller's behalf. So let's say the servicer is PennyMac, we'll file for a TPA with PennyMac, and that means that anytime we want to, order an assumptions package, we want to push them on that close of escrow date, or we want to ask for further clarification on next steps, we can really do that on behalf of the buyer and seller. Once that TPA is filed, they don't even need to be on the phone with us when we call. We're just going to be able to call on their behalf to really get that close date streamlined. We also work with sellers and listing agents. We charge the buyer 1% of the purchase price, and that's paid to us through closing costs, but we don't charge the seller anything. And we obviously do not touch the commission of the listing agent or the buyer's agent, as long as we're not referring these people to you. And so the steps to selling with Rome, it's even more simple than buying with Rome. You essentially just send us the information. You can either email us the information on your listing, or you can fill out the information on our form online. But if you have an FHA or VA loan, essentially we'll help you market it to a bigger pool of buyers. So specific steps. First, we'll need the listing info. So, send over the interest rate, the remaining mortgage balance, and then the seller's current monthly principal and interest payments. That is what we will need. If you go on our website, you'll also see that. So no need to remember all of this right now. We will make sure that the loan is assumable. We'll confirm that it's an FHA or VA loan. And then we will get all that information confirmed on our map. We'll verify the listing on our map. We'll also send you marketing collateral. So we'll send you some verbiage you can include in the MLS. We can even help with lawn signs or physical collateral for you to help market the assumable mortgage. And then we'll pre-screen buyers for you. So that means making sure that they have the appropriate down payment amount, and just basically walking them through the next steps as well, and working with their buyer's agent on submitting an offer with the assumption. Finally, like I said before, we'll coordinate with the servicer until close. We really just cut your work pretty significantly throughout this process. And you guys might have also heard that some of these servicers are really taking a while because they're backlogged with the assumption. They just don't have enough capacity to support the amount of assumptions people want to do. And so we're here to be your advocate. We have seen closings as soon as in 45 days. We're seeing an average of 60 days. And to be honest, it can go longer depending on just how much capacity they have and how fast they're willing to move. But what we can guarantee is that we're going to speed up the process and just make it easier. Yeah, so that's pretty much it from me. I will stop sharing so I can see if there are any questions in the chat, but
Hey,
yeah, thank you,
Lee
Barry,
Mae,
for providing our website.
did you share the referral program? Did I miss that?
Yeah, no, sorry, I have not yet. So the referral program is we get a ton of unrepresented buyers and sellers. And these are people who perhaps weren't even in the market until they realized they could get this low rate. And so they came to us without an agent, wanting to be connected to a great agent that we've worked with before. So Barry is one of our referral partners where, if we get an unrepresented buyer, we will send their information over to Barry. They'll make that connection, and then we'll work with Barry throughout the assumption process. So there's a lot of opportunity to become one of our referral partners. You can send me an email at, pop the email into, I know it looks like just a support email, but this is the best way to reach us because we all receive these emails, and so my entire team will see it. But this is a great way to become one of our referral agents. Usually what I like to say now is we want to work together on maybe just a transaction or two before we get you added to the referral system. So if you guys have any buyers or sellers that are interested in the assumption, let me know. We'd love to work with you on that. And then from then on, we will start referring buyers and sellers over to you pretty much immediately. As Barry said, he got 4 referrals in 4 weeks. And so once we really trust an agent, they really become a preferred partner for us. So yeah, let me know if any of you guys would be interested. Again, you can just send me an email, and the process is not difficult at all. You'll just get added to a database on our end, and we'll start sending you referrals.
And Lee Mae, quick question. I know we have one agent here that's in California. And are you guys there yet? Or I know last time we talked you weren't, but I know you're growing very quickly.
Yeah, that's a good question. So not yet, unfortunately. I'm from California, so I'm very excited for us to get there. Next year, we are definitely expanding very significantly. I don't know exactly what quarter yet we are planning to be in California, but I can keep you guys posted. And there's a way, if you go to our website, to get notified when we're in a new market.
Okay, all right. And just because they're not open in, say, California, or if there was another state, I think everyone else is here in Colorado, which they are available in. It doesn't mean that you can't do the assumable. It's just that you'll be doing them the way I was in the beginning, where you're kind of doing the legwork. But I tell you, you do it one time, you kind of get the system down. And if it's your first time, feel free to reach out to me. I'm more than happy to walk you through the process. Like I said, what I saw, because of being in real estate long enough, it resembled the short sale process. So it wasn't, overwhelming or anything like that. Like I said, it's just frustrating being on hold forever. But yeah, like I said, it's just been a great avenue of being able to do business. Some of you may have seen some of the video content that I'm putting out around it. It's just educating the public. And like I said, the purpose of this is to just get more realtors in front of it as well, because I truly believe the more agents that we have that understand this, that can share it with their sellers, the more opportunities we have to do assumables. One thing that I kind of realized when you go to the Rome site and you look at the map, if you look at kind of the Metro Denver area, you're going to probably find when I checked about a month ago, there were over 500 properties that Rome shows you are FHA and VA properties and USDA. But if you go to MLS, RE Colorado, and you put in qualified assumption, that means that the listing agent knows enough about assumptions to check that box and say, hey, we're also doing a qualified assumption, and they'll probably have some information in the comments. There was only like 52. So 500 that could be eligible, but only 52, 10% that are actually being marketed as assumables. So that just kind of shows you that we have a lack of education in regards to this area. And the more that know about it, again, the more opportunities that they're going to be out there. Going back to your question, Michelle. So that 10% is 10% of the purchase price. So if it's the example, a $500,000 property and the assumed part is 400,000, we got 100,000 that needs to be made up. If they don't have that in cash, they would still have to come up with 50,000, 10% of the 500,000. And in some instances that, may work for people where they don't have the larger amount, but they have the 50,000. So hopefully, did that answer your question there? Okay.
And
Hey, Barry.
you're saying, sorry, for the second mortgage, right? Like coming up with the 10%, then you can access the remaining through a second mortgage. That's what you were referencing, just to clarify.
Yeah, 10% of the purchase price. So instead of having to come up with the whole 100,000, you're only coming up with 50,000.
Yeah, and Barry, wanted to add one thing to that as well, is that because the investor, it's not normal conventional underwriting like a mortgage like I would do with our underwriting. Yes, they do follow Fannie, but what I've also discerned is that they don't care where your 10% comes from, where, let's say, a normal bank lender will verify and document it. So, I mean, someone can get like a gift, they go get a personal loan, they could do whatever they want because they're not going to season it, they're not going to verify where they got their money from. As well too. So it could be just another angle that people could get access money without having to try to, verify it, through normal means. So just wanted to add that.
All right, good. All right. Any other questions? You can just unmute yourself if you want to just share it. All right. And Lee May, did you put your contact information? Okay, support, yeah. All right. Yeah, like I said, definitely reach out to Rick, reach out to Lee May, and learn more about what they're doing. I'm telling you, it makes doing this for me so much easier to have them as part of the team on this process. As Rick mentioned, when I get those calls of someone that, oh, I saw your ad or I saw your post or whatever about this property, but I'm not qualified, I send them to him so that we can get that. As a matter of fact, I got another one I got to send you, Rick, so I'll call you after this. But it helps to make sure that they're pre-qualified before we move forward with doing a contract. All right, well, I don't see any other questions. I hope this was helpful to you, and I'm telling you, this is just another marketing piece that I'm using that is really just kind of setting me apart from what everyone else is in real estate is posting or what everyone is emailing to their sphere. It gets the phone ringing because people are like, wait a minute, I've never heard of this assumption thing. Can you explain it? So it's been very helpful from that standpoint. I really look at 2024. I think we're going to have an amazing year because of, what some of the projections are in regards to interest rates, what's, expected there, but also having this assumable piece as another tool that you can use. I'm excited and I hope you are too. And just, that's why I wanted to share this in regards to being able to give you something else that you can use to just bring more business your way. With that, I'm going to say thank you for everyone for being here. We did it under an hour. That's incredible. Reach out to me, Rick, Lee May, if you have any questions, and we're here to help. Thanks, everyone. Y'all have a great day.
Thanks, Barry.